Now, the way the economy is going, the hits keep on coming. Now, we've been talking about the auto loan crisis for quite some time. We've hit record high delinquencies and record high repo rates higher than 2008, which is very alarming. And now we're starting to see it in the actual mainstream media. People are worrying about what they're going to do with the auto loans. Cars are actually being given back. It's a very highly searched Google term on Google Trends of people actually wanting to give back their cars. But there's something that nobody's really talking about, and I've said for a little bit on this channel, and that is actual title loans. I believe that the title loan crisis is much worse than the actual auto loan crisis. How this is all going to factor into the market and how you're going to see this popping up the news here very shortly. Now, first, we're going to go ahead and start off on how we actually got into this predicament. Now, during the pandemic, as you guys know, a lot of people got extra money. They got stimulus. They didn't have to pay rent. So they had an extra $5,000, $10,000, $15,000 in their bank account. And what happened? People started buying cars. And as you guys know, when everybody started buying a second or a third vehicle, it started raising the vehicle values because there weren't enough cars out there to go around. So we've had 3 years of an absolute roller coaster when it came to the automotive market. We've seen prices go up, demand surge, but now we can start to see the demand going down and prices going down as well. And this is reflected when it comes to the actual title loans. Now, this was the perfect storm to set up title loans to basically take over our mainstream America. Now, a lot of people that bought those second and third cars during the pandemic didn't really qualify for traditional loans, so they paid cash for them. So they decided, you know what, I own this car outright, I need a few bucks to borrow so I can pay some bills or do whatever. I'm gonna go ahead and go out and get a title loan. Now, to get a title loan, it's a lot simpler compared to a traditional auto loan. Now, with an auto loan, you have to actually get pre-qualified. They have to check your credit, your proof of income, and also your DTI, which is your debt to income ratio. Once they figure out what scale you're on, they're gonna give you your interest rate, the amount of what you could finance, and how much of a payment you can truly afford. And that's how auto loan companies work. But with title loans, it's completely different. All they care about is the value of your vehicle. Now, this is what's getting a lot of people in trouble. Now, depending on your state, there are different rules and different companies have things. Now, the first of all, they will give you up to 60 to 70% of the vehicle value. So let's say, just for round numbers, you want to borrow, let's say $70,000 on your $10,000 car. Well, they don't really care as long as the vehicle value is there. They're not going to hit you up for DTI or your credit. They just want to make sure that the car value is there. But you have to remember that most title loan companies will give you these loans, but there's always a caveat. Since they're not checking your credit and you don't have to qualify like a traditional loan, they're going to hit you at very high interest. The average interest rate on some of these title loan companies is over 300%. Which is absolutely insane. So for your $7,000 loan, you're going to be paying, I think it's about $320 every 2 weeks. And I believe 90% of that is actually interest. Only a small percentage of that goes to the principal. And that's the purpose of these title loans, is to basically trap people in there where every month you're making these payments, and by the time you're done paying off your $7,000 loan, you're probably more likely paying about $12,000 to $13,000, including all the interest and everything. And this is what these title loan companies do to trick people into getting these loans. Now, the reason why it's such a crisis is because so many people need to get rid of their cars. They don't want to sell them. They see the vehicle values going down. So they figure the next best thing is to keep the car and go to one of these title loan companies and borrow money against it. Well, now one of the biggest companies that I work with is giving me the most repos is an actual title loan company. They're repoing here in Las Vegas an average of 150 cars a month. Now, when I tell you that this title loan company doesn't have a lot of stores, it's not the biggest, and their operation in Phoenix has over 300 repos a month, which is absolutely insane. This just shows you how it's starting to sway towards title loans. Now, title loans is going to be a much more volatile market when it comes to repos, late payments, and actual delinquencies. Now, with a lot of my premium banks that do exotic car leasing and stuff like that, they'll maybe call me once a month for an exotic car. My regular banks will call me maybe twice or 3 times a month for a decent car, maybe a 2023 or 2020 with decent miles. My subprime banks, I'm probably getting about maybe 8 to 10 calls with about 10 to 30 cars. That is the average of what I'm seeing. But with these title loan companies, like I said, we're seeing over 150 cars a month. That just shows you how much money they're putting on the road. Now, this company, like I said, is not the biggest. There's a few nationwide ones, which I won't mention names, that are doing millions of loans every single month. So that's why when I say record high delinquencies and record high repo rates that are finally hitting mainstream media, this doesn't even take account for all the title loans that are currently out there right now. The title loan game makes a lot of these subprime banks look like welfare cases. That's how much money they're putting on the street at 300%. Now, the reason why they do this is because the handful of people that actually pay their loans will pay for all the delinquencies that they're having. I know they're hovering around somewhere around 18 to 20% repo rate, which is extremely high. But with the money they're making from interest, it pretty much offsets their costs. So now that I've talked to them, I'm like, what are your guys' plans moving forward? They are actually getting more money together to lend because they see the market turning even worse. They're getting more loans for newer cars. I just looked at a few brand new cars, and I'm not even joking when I say brand new. 2021, 2022, and 2023s. Now, people pay cash for these things, and now we're taking them back in to get title loans against them. And like I said, just because of their credit and maybe they lost their job or some sort of instability, they don't qualify for a traditional loan. So they have to go to these title loan companies to give them the title to get the cash they need to pay their bills in order for them to actually move forward with their business. But the downfall is they're getting whacked at that 300% interest. And this is the reason why I decided to make this video. Now, traditionally, we see a lot of cheap, affordable cars. You always hear me guys talking about a lot of the cars that we buy are under $5,000. But most of the cars that I've purchased in the last 2 weeks are over $15,000, which is pretty rare when it comes to a title loan company. Now, here in Nevada, there's no laws. We can lend up to whatever it is, the dollar amount, and they will actually do it. Right now, they have a brand new Ford F-350. It's a 2022 with like 10,000 miles. I think they borrowed $25,000 against it. I think the truck is worth maybe about $50,000. So I'm sure what they're going to do is probably either find somebody to pay it off or whatever else. But this is what we're currently seeing in the market, and these are the trends that are starting to happen. This is what alarms me. Now, people usually say that title loans are for the subprime market, or it's for people that maybe can't manage their finances as well. But we're seeing more tier 1 customers popping up there than before. Now, a few people that I talked to that came to get their stuff out of their repos were nice enough to answer a few questions, not on camera, and I asked them what made them get a title loan compared to an actual regular loan. And all of them said the exact same thing. They're late on their student loans, they're late on their other car payments, they borrowed money against this car to pay some of their other bills to keep them going. And so basically they're robbing Peter to pay Paul to keep things afloat, and now they don't qualify for traditional lending. Now remember, every time these banks have more repos and delinquency goes up, and like I said, we're at an all-time high, it's making it much harder for people to finance traditionally. So now these payday loan companies are putting millions of dollars aside to lend to people that are going to be in this exact same predicament. All these people that own their cars cash, that need money, are going to start borrowing money against their vehicles to pay their bills, and this is what they're planning on. And they're so sure of it, one of the companies I talked to is building 7 new locations here in Las Vegas and 15 around the Phoenix area, which is absolutely scary. So, and that's just here. I'm sure if we go to Texas and some of the other Midwest places, it's even worse. Now, I know that, believe it or not, Tennessee has the highest amount of title loans per capita. Didn't know if you guys knew that, but that's something to look forward to. More economic depressed areas or something that's more in a rural area will have more title loans compared to a major city. Now, if you're in these areas, please be careful. If you need money, I would recommend, if you don't need the car, sell it. If you can do some sort of a secured loan with your title at a small bank or credit union, do that as well. Because remember, if you go to these title loan companies, you are going to get whacked at 300%. Now, the only good thing that comes out of this whole title loan thing is if your car is worth more than what you owe on it, if they sell it at auction or to a dealer like myself, the balance of that has to go to the actual customer. That's one of the good things. So hopefully, a lot of these title loan companies don't lend you a lot of money on a car. They usually give you about 50, 60% of the value. So you will be getting money back. So if you do have a title loan and it's gotten repoed and they're calling you, answer the phone. More than likely, they're trying to give you a check back for the balance of what they sold your car for. And also, if you do have a repo, give them the keys, tell them everything that's wrong with the car, because remember, if you do all this stuff, you'll get more money for the car and you owe less money. Now here in the state of Nevada, you can't sue for the difference as long as you give back the car. But in some states, they can go after you for the balance and the difference. That's why I've gone to some places in California and Phoenix where they'll literally sell me a car with no keys. They don't want to make them. They don't care. They just want to get it off their books because they're going to garnish this person's wages and everything else. So give back your keys. Let the car run, tell them all the good stuff and all the bad things about it, so this way you can get top dollar for your vehicle. Now, I'd love to hear you guys' opinion on the actual title loan crisis. Did you guys know it was this bad? Do you have a few friends doing this? Also, did you guys know that it was 300% interest, which is crazy? And like I said, there's millions of Americans every single month getting these title loans, and this is nothing new, and this business is only going to grow because of the demand of people being desperate. Remember, when all these economic times turn really bad, I talked about opening up a dealership and doing buy here, pay here. Title loan companies are going to be doing the exact same thing and doubling down because they know that average Americans can't really make their bills, and so they're going to be going after all your cars. So please be careful. But anyways, I would love to know what you guys think of the whole situation down below. Also, if you had some experience with title loan companies, put them down. What were they charging you? What are some of the crazy things? But I want to thank you guys so much for watching. Once again, follow us on Instagram at Lucky Lopez. And if you've liked this video and learned anything, please like and subscribe. It means a lot. We're on the road to 500K. I was hoping to hit it before the end of the year, but we're very close. I think we're at 445,000 subscribers, which is truly a blessing. We are still the largest automotive channel when it comes to dealership stuff. So I want to thank you guys so much for watching, and we'll see you next time.